I believe with all of this stuff happening that they're going to destroy the dollar. They're going to destroy the
Purposely.
dollar purposely in an effort to save the system. Let me explain. Trump gets up on stage in a year or two and he looks right at you, Jay, and he says he's talking to your daughter and to the father in you. And he says, listen, we got to do this so that your daughter and her children have a future. And if we don't, if we have all of our key manufacturing around the world, we're done.
Yes, the 30% tariff applies to silver imports from Mexico and the EU starting August 1st, 2025. People will be wishing they can build a time machine, go back to July 30th, 2025 and pay $37, $38. They will be wishing that. Like, we're still the people that bought Bitcoin at 20 cents in 2014.
You're talking the majority of human population if you bring in the Belt Road, which they are now saying BRICS Bay and BRICS Bridge are being integrated into the Belt Road, along with the Shanghai Cooperation Organization and the Eurasian Economic Union. We got the 11 Asian countries, the 5 Middle East. You have the majority of the world and the majority of the commodities and the majority of the rare earths and the majority of the refining of the rare earths and the majority of the manufacturing of the world and the majority of the on-sea and cross-land trade routes and 3 of the 4 largest. Do you see where we're going? This is nothing to say, yeah, bullshit, it's not big enough.
Right. All right, folks, thank you for tuning into the Silver Stacking Podcast featuring yours truly and the man, the myth, the legendary Andy Schectman, which is the CEO of Miles Franklin. You guys all know him. You love him. He's everywhere and anywhere in between. He's taken over, and that speaks for itself, honestly. Now, if you wanted to purchase from us, especially with this pullback right now, then send an email to info@milesfranklin.com. Let them know Slayer sent you. We have weekly specials right now. Dimes and quarters, 99 cents over spot. Krugerrands, 279 plus gold and platinum specials every week. A great company. I'm really honored to be able to represent for them. There's so much that's gone on since last time Andy and I have talked. So this is going to be a great episode. I'm really excited. Stick all the way through because there's so much. So Andy, what's up? It is good to see you. How you been?
You know I love you, brother. It's good to see you more than anything. It's good to be back. Good to see you. You look good. I hope we can do this on a regular basis once again. And life, you're a lot of the things you say make great sense to me, and in particular the acceleration of things that are happening. And it's like when I think back to being a young guy, big events happen so infrequently, and they were big events because they happen so infrequently. And now it seems so many things that should be big events are big events for about 12 hours. And then the narrative shifts to the next big event or the next, dilemma or the next fraud or whatever. I mean, there's so many things, and that stuff just fades away, and which is crazy. And that's why I like the analogy of life as like a roll of toilet paper. You don't notice it spinning when you're younger, but as you get older, it just seems to be spinning faster and faster and faster and faster. And, let's hope we got a while before the cardboard hits. But I think that's kind of analogous to the way the world is right now. There's so many things spinning so much faster, and some sort of I think of a conclusion or of a change in the narrative is coming. And it's coming sooner than people think. So yeah, let's jump in, man. It's good to be back with you for sure.
Yeah, there's been some really big things coming out that I think will actually affect the price this time for the longer term. Like, I've been talking about Ted Butler a lot lately, rest in peace. Because what he always mentioned was the COMEX, this price manipulation, this corruption, but his whole point was always this cannot last forever. It has to fail at some point. And when it does, who knows what silver is going to be. And that's what we've been seeing a lot lately. Lease rates up 6%. People want the physical metal. And not only just over here, but you see China as well. Russia now focusing their central banks on silver. You have Trump throwing 30% tariffs on Mexican and European silver imports, and then LBMA, record low inventories for silver. What do you think right now is the biggest thing, or what's the biggest news that's been coming out? Because I've been posting daily videos, and I swear, like, every video itself is massive news. So what for you right now going on is most important?
Well, certainly we've talked a lot about, I've been focusing a lot about the LBMA. I think that's where you can see much of the stress. You mentioned record low volume or inventory. We call that the float. The float is what is available for delivery, backing the bars that are, or the paper that the bars that are backing the paper certificates. They have right now, I believe, about 155 million ounces of silver. That is the lowest volume, the lowest float they've ever had since they started keeping records. This is a 140-year-old exchange. Now, I don't know when they started keeping records, but I do know it's the lowest total since that point. Um, and what's interesting is they admit to trading somewhere in the neighborhood of about 180 to 190 million ounces a day. So they're trading more than the stated float every single day. But David Jensen, who does a marvelous job of analyzing the LBMA intricacies and you know the inside and out of the LBMA, and he says, well, actually, that they have admitted to trading 10 times that amount, as they only post the final settlement numbers the day that would equal 190 million on average, but they're trading throughout the day upwards ends of 10 times that amount, which would mean they're trading 1.9 billion with the B ounces per day, which in this case is almost 15 times the float, 3.5 times the annual global mine supply. This is why they went from a T plus one settlement exchange, where T is the trade day plus one settlement day. The third day the bar should be moving to you. So if you own a company that produces and manufactures jewelry all around the world and you have LBMA contracts and you need your silver and gold to make your jewelry, sorry, Slayer, you know, we're going to be 8 weeks delayed because, well, we're the Bank of England and we don't have enough in the way of manpower or trucks right now. That's what they've wanted us to believe for a while. It might be getting a little better, I don't know, but I can tell you that the delays coming out of the LBMA signal to me, in essence, a soft default, where the reason they don't have or aren't able to deliver the silver isn't the fact that the Bank of England can't come up with trucks and manpower. It's that they don't have the bars to deliver when they need to without blowing up the system. But this is something that we're seeing, not just there. We're seeing it in other places too, and we're seeing it in platinum as well. And speaking of the LBMA, before I get to that, and how platinum will spill over, you know, it's funny. The LBMA just came out with a warning saying that counterfeited silver and gold will distort prices by creating artificial supply. I almost fell off my chair when I heard that.
What?
I'm thinking to myself, yeah. So they say there's beware of counterfeits because this distorts prices and creates artificial supply. Then I'm thinking to myself, but isn't this the same company that sells claims on gold and silver that can't deliver? Doesn't that kind of sound like counterfeiting
Right.
or trading billions in unallocated bullion contracts backed by nothing? Isn't that the same thing? But anyways, I thought that was funny. But there was a man, I want to read to you something here. His name is Bruce Ikemizu, Ikemizu, formerly head of Chinese bank ICBC's Tokyo Precious Metals Desk and now head of the Japan Bullion Market Association. Bruce says that the market may already be broken. He more or less says that London and Switzerland appear to have virtually no physical platinum available for delivery. And he says it seems that there really is no platinum in loco, meaning location, loco, London, or Zurich. Yet the exchange continues trading nearly 3 million ounces per day. So what's that? $3 billion roughly? Even no, 3.5 billion? No, what would that be? 1,400 times what? 3 million? So what? Three, 4 point, whatever.
Yeah.
Do the math for
Something
me. What
crazy.
is it?
Would
Okay,
you
so
say?
it's like 1.2 or 3 billion dollars
Yeah.
worth a day of so he says they're trading 3 million ounces per day of London promissory note cash contracts for immediate platinum ownership and delivery. Something is about to break. You mentioned the 7 or 8% lease rate in silver.
Yeah.
It's 30% in platinum. And he says, you know, paying 30% interest to borrow platinum makes it unreasonable to consider just buying it outright, says Ikemuzu. I cannot recall a time when lease rates rose this sharply. So it's 7 or 8% in silver and it's 30% in platinum. That means if you have to borrow for a 1 month contract, in order to cover, you're paying 7 or 8%, or in the case of platinum, 30. Behind the banks, he says, are the actual users who borrow from them. He says mining companies, recyclers, jewelry manufacturers, and industrial users. Now, here's the part I wanted to read to you. The revelation of the frailty of the London platinum market can and will most likely knock onto the other London metals, such as silver, that are also traded at leveraged cash contract promissory notes, thus lifting the veil on one of the biggest market frauds in history. And to your point, silver is now seeing a concurrent surge in its 1 month lease rate to 7%, 1 month for 7%. So, yes, and we are seeing an explosion in the exchange for physical, the premium that is exploding. And now it's kind of contracting where it's moving towards backwardation, where just all of a sudden, where the front month silver that is available is actually priced higher than the futures, which is abnormal. And that basically says that, well, we don't trust the future. We want it right now. So there's a premium to get it right now. Normally, you pay a premium to get it out in the future, which is the time value of money and the increase in the market. But to get it now is actually more, almost to the point where it's in backwardation, where it costs more than it does out into the future. So the market is all messed up. And then you put that into context with the largest deliveries in COMEX history, month over month over month, in gold and in silver. The silver market is changing. I look at it from a technical standpoint, Jay, right where gold was about a year and a half ago. And I think it's poised to make that breakthrough. It is acting very differently. We don't see
Yes.
those smash downs. It's trading within a range, and
That
then and it's just bound to take off on so many factors. This just being one of them, the tightness
yeah.
in the market above us.
The Shanghai silver is 10.5% higher on the Shanghai. That's
So that's called
also
arbitrage.
right. Right. And you've talked about that a lot, the disconnect and how they're taking advantage of the Western. But anyway,
Well,
I
if
just want
you're
to
a
throw
big
that in there.
trader, and if you're a big trader and you can say, hey, we can sell, we can sell a huge amount of silver to deliver it to, like, to Brinks Hong Kong, which is a COMEX contract and a COMEX facility. So you do an exchange for physical to Brinks Hong Kong, where it's delivered there, and then it just gets onto a truck and is delivered to the Shanghai
Yeah.
Exchange, never to be seen again at a 10.5%
With
premium to the trader.
new facilities,
So
right?
it is a Brinks facility in Hong Kong, which is a COMEX facility.
Yeah. Okay.
So you can do an exchange for physical from a paper contract here in COMEX, exchange it for physical in Hong Kong, where it's delivered, and then it's just then brought by truck over to the Shanghai Exchange and ain't ever coming back. The same thing has happened with gold. And so there's a battle for the world's commodities right now. And I think the United States realizes that. I do believe that this
Hmm.
administration understands it and is doing, which leads me to something that I think people need to understand. I just read that since June, just since June, um, Jeff Bezos has sold almost $6 billion worth of his stock. 6 billion. You have Jamie Dimon selling massive amounts. You have the three largest shareholders and board members of Nvidia selling hundreds of millions of dollars worth of Nvidia. All of them. You have Warren Buffett on 500 billion with a B in cash on the sideline. You have all
David
of
yeah.
these,
David
all of them.
Bateman bought $1 billion worth of silver and turned it into physical and took a picture of it on Twitter. It's
Yeah, and
insane.
I want to get him on my podcast actually,
Yeah.
and actually we became friends on LinkedIn, I think. But the
Oh,
thing of it
really?
is
Yeah.
simply this, that the insiders, and since June 1st, the industrials have been selling equities at about 2 billion a week. And so they're dumping all of the insiders and the corporation owners or CEOs with all the stock options are selling and going to cash. At the same time, the retail investor, mom and pa, have the largest allocation to equities in the history of the market, even more so than the dot-com crash at about 54%. So the public retail is all in and the insiders are moving all out. At the same time, you see the largest deliveries in the history of the COMEX market, month over month over month, where we've brought in over 100 billion in gold and silver since November that we know of. Now, I would argue that either through the Exchange Stabilization Fund under the guise of national security or by proxy behind Citibank and JP and Goldman, that a lot of this stuff is coming in and it's being delivered through maybe bought through other exchanges, bought through artisanal miners directly, bought through small miners directly, bought through other places that are not registered on COMEX, like vaults in Switzerland or in Singapore or all around the world. Lots of metal is coming in, and who's buying it? The point of it is, whether it be the central banks on a massive buying spree, which they have been for years now, or all of a sudden the largest deliveries in the history of the COMEX to the tune of hundreds of billions of dollars here, but the public is nowhere to be seen. The public has very little exposure. When Silicon and Signature failed, we added 14,000 clients in 45 days. It's nothing like that right now. Yeah, we are doing some big orders for people who see what's coming, but it is nothing like the volume that we witnessed largely during the pandemic and towards the end with the bank failures, which we're not out of the woods yet. But the point of it is that look at the contrarian indicator. The insiders are loading up and taking possession, taking most of that delivery has come off of COMEX. The central banks are repatriating it from the Bank of England and the New York Fed, taking possession, removing counterparty risk. So the insiders are selling equities and buying commodities and taking possession. The public doesn't own hardly anything in the way of commodities and is loading up on equities. What could possibly go wrong in that environment, you know? And so I think that that's, but I want to say one other thing, and I'll take this wherever you want to go. I want to say one other
Yeah.
thing that, so, you know, a lot of what I've been talking about for a long time is BRICS, and you know that. And I talked about this new bridge technology that has been adopted. It's a Chinese technology, and it's now called BRICS Bridge. And that, in essence, is central bank to central bank. And I mentioned that I believe that they are expanding it to the Belt Road because Russian finance minister came out and said, well, we're going to open this up to non-BRICS countries. And the minute he said that, it lit a fuse under the dollar. And I expect, now he came out and said, we've already extended it and have connected 11 Asian countries, those in Southeast Asia, and 5 in the Middle East. That's 38% of global GDP. They are now operationally connected. Then he said, we're going to, you know, open this up to other non-BRICS countries, not the West. It's not compatible with the dollar, the euro, or the pound, this new cross-border technology that settles in 7 seconds outside of SWIFT. But these other countries are hooked up. And I said immediately publicly in my speech at Rick Rule, I said, they're going to open up to the Belt Road, which is 75% of human population and 55% of global GDP right now. You put that with the Asian countries in the Middle East that are already part of it, along with the Shanghai Cooperation Organization, which in and of itself is 50% of human population and 35% of global GDP, and the Eurasian Economic Union and the BRICS, you're 90+% of human population, 3 or 4 of the largest nuclear arsenals in the world, the majority of all the commodity production, the majority of the manufacturing. Vietnam just joined along with China. I mean, on and on and on and on, and it is nothing to shake a stick at. It is nothing to underestimate. It would be silly to do so. All right, so they're setting up the infrastructure. Well, how? The infrastructure, the backbone of it is the Shanghai Metals Exchange. You mentioned them. They just expanded their outreach. They just finished a new vault in Hong Kong. So anyone who, and they just made it now deliverable gold in yuan, where you do not need to convert first to dollars.
I
So the
just
next
talked
vault
about
is
that. Yeah.
the next vault's being built right now in Saudi Arabia. And then from there, they go all throughout the Belt Road. So they're expanding the skeletal system of it all are these vaults, multi-jurisdictional vaults all around Asia, Africa, South America that will spring up. There are 2 right now that are connected, and that's Saudi Arabia and Hong Kong. So right now, the Saudis can buy oil from China in yuan and immediately convert it into gold in yuan, not going back to dollars first, and take possession in Hong Kong and soon to be Saudi Arabia. This will expand. All right. So I was saying that's a huge ass deal. Well, then I see an interview the other day, and I'm saying this. By the way, UBS just raised their silver target to 42 bucks. I'm sure you saw that.
Yeah, and
But
Citigroup's 43
yep.
too.
But I wanted to just to cap this by so you understand this is covering 2 separate things, right? And on one end, it's covering how fast the dollar is going to get killed, and on the other end, it's covering 3 things. What I think our plan is, And the third thing is why you need to think of doing this very quickly, not just because of what's happening to metal, but what's happening to our privacy. So, anyways,
Mm.
I watched this interview with a guy named Andre Mikhailshin, Mikhailshin, Shin, Mikhailshin,
What a name.
whatever. All right. So Andre is the developer and CEO of BRICS Pay. Now, I've talked about BRICS Pay, and BRICS Pay is a B2B application, business to business. It is a consumer to business, business to consumer, small bank to small bank. It's retail, and it's again doesn't it sidesteps Swift, and it's instant pay. It's like a Visa card that he even said we'd love to work with Visa, but we're sanctioned, so we can't work with the West. But he said it's open to non-BRICS members as well, and we are currently in meetings in China to develop brick pay technology throughout the Belt Road. Oh, really? So that's 75% of human population that will have the ability to transact B2B, consumer to business, et cetera, small bank to consumer on BRICS Pay outside the SWIFT system immediately. So you have the central bank to central bank, that's the BRICS bridge. You now have BRICS Pay, and he said it's open to all these other countries. And he said in the very near future, BRICS Bridge and BRICS Pay will be combined. So all of these things are coming in, and this is going to kill the dollar over time,
Oh
right? Because
yes. Oh yes.
you're you're killing the settlement status by not using dollars. They trade their
Right.
local currencies, and then the reserve status is no longer treasuries; it's
Right.
gold. Well, so and then I'm going to tell you one thing that he said. Then I'm going to tell you what I think is happening, and then I will answer for the rest of the time. I will answer
No, you're
questions you
good.
have.
No, this is
All right. So he says he's asked a question, and the lady says, "So Andre, the world is filled with terrorist organizations. How do you know that your technology won't help fund terrorist organizations?" And he says something that I'd never heard before. Now, I leave my company in Minneapolis, Jay, because my main company, even though we've had a satellite office here in Florida for going on 18 years, I left my corporate office there because the only state in America where you have to be licensed and bonded and background checked. It holds Miles Franklin to a much higher standard. Most companies won't do business in Minnesota because you would have to be licensed, bonded, and background checked every year, myself included. And it's the same thing as it's related to like FINRA and selling securities. So Miles Franklin, even though we've never had a customer complaint in 35 years, the fact that we're licensed, bonded, and background checked annually separates us. And if you tell people, most companies send it to Minnesota, they'll say, no, we can't. So
right.
anyways, I know that what I'm about to tell you better than most because I take the classes. So he said, well, regarding the terrorism question, he said, well, we are opening this up to all sorts of other countries, not just the BRICS. And so we are very sensitive to KYC and AML issues. KYC is know your client, and AML is anti money laundering. So these are the
Okay.
regulations like when you open up an account with Coinbase or you open up a bank or any of these things, they want to know who you are,
Oh yeah.
where the money
Yeah.
came from, and anti-money laundering makes sure that you haven't been selling, weed on the corner for the past 30 years. So you have your W-2 says that over the past 18 years you've made $9,000, yet you open up a bank account with 300,000 in $20 bills. They may have a problem with you. That's anti-money laundering. Where'd you get the money? How'd you get it? Your
Right.
W-2 doesn't support it. That's know your client anti-money laundering. Those are the kind of things that they're trying to protect against, right? But then he said something else. He said, and KYT as well. He said, our software is compliant with KYC, AML, and KYT. Now, I'd never heard of KYT. But for those of you that have gone to the bank and tried to, you're going on a trip with your friends to Vegas, you take out $2,000, and the teller says, "Excuse me, what do you plan on doing with all that money?" And you always want to say, "None of your damn business."
Right.
But they've been asking that for a long time. My feeling is that they have been pushing KYT to the tellers and say, by the way, it stands for Know Your Transactions. And I've never heard that before.
Mm.
So they've probably been saying, ask them if they volunteer it, write it down. If they don't, if they push back, let it go. If they say something that makes you suspicious, fill out a suspicious activity report form. We will never it's illegal to report who filled it out. So if a teller said, yeah, he was really freaky and I didn't trust what he was saying and I think he's up to bad news, she'll fill that out. It gets filed up to some bureaucrat who looks at it, and if they believe you need to be investigated, you will. Well, anyways, what I'm saying is with this new stablecoin passage, if you don't believe that they know who you are, where you got the money, and what you are spending it on, I got a bridge to sell you. So when you talk about this new stablecoin deal, and I'm going to tell you why they're doing it, and then I'm going to shut up because this puts my whole thesis together. All right. So, anyways, the noose, everyone thinks, oh, it's great, there's no CBDCs, but the noose of privacy is closing. And it's closing because they will control the on-ramp, off-ramp. The whole premise of this new stablecoin bill is the legislation of it and the regulation of it. They will know the on-ramp and the off-ramp. They will be watching, and they will know, what you came in with and who you are and what you bought and what you're coming out with, all of that stuff. All right, that's all going to be digitally programmed. But the reason that we are seeing the stablecoin bill is not what people think, in my opinion. It is not because of the being enamored with what stablecoins offer. And again, they call it a stablecoin backed by almost exclusively by treasury debt. How stable is a coin backed by debt that buys more
Right.
debt, and which in turn buys more stablecoins, which buys more debt? It's not really at all. But here's the reason they're doing it: we're broke, and it's gotten to a point where we can't even really, like, they just are right now. The next treasury auction, they're printing like they're trying to sell 140 billion worth of bonds to buy back 85 billion in bonds that are, or 125 billion in bonds to buy back 85 billion in maturing bonds, and then another 30 or 40 billion to run the operation. So they're selling debt to pay off, they're going deeper into debt, get money to pay off the debt that's coming due, and then to run the ship, which is all indebtedness and everything there. I mean, so they just raised the debt
Yeah.
ceiling 5 trillion and $3 trillion deficit. But here's the thing: we owe $28 trillion by 2028. That's treasuries coming due. And with a $3 trillion deficit minimum each year in 3 years, 2028, that's another 9 trillion. That's 37 trillion. We take in 5 trillion a year in tax revenue. It's 15 trillion. So we're about 25% of the way there, or a little bit, 15 to 37. So almost a third of the way there, just over a third of the way there. Where does the rest of the money come from? They're going to have to print. There's no way that they will be able to. We can't grow our way out yet. I think ultimately that's what they want to do. Can't default. Well, what are we going to do? We have to continue to print money. I believe with all of this stuff happening that they're going to destroy the dollar. They're going to destroy the
Purposely.
dollar purposely in an effort to save the system. Let me explain. So these stable coins, every stable coin that's issued, you look at Tether, they're already a massive holder, one of the biggest of treasuries, all short term.
Valued
And
at a dollar.
so, yeah, so these stable coins are backed by treasuries primarily. And when you realize that you have countries like China and Japan and Saudi Arabia dumping treasuries and buying gold, where is the support for the ever increasing debt? So they continue to print money. They destroy the value of the dollar. But I'm going to tell you how they ultimately destroy the value of the dollar in a moment. But so they continue to print because they have to pay just to be able to pay the debt that's coming due, and they continue to issue short-term treasury debt through the issuance of stablecoins. And you'll see all these corporations like American Express and banks, they'll all issue stablecoins for ease of transaction and this and that and boom, boom, boom. But behind all of the stablecoins are treasuries. That's pretty much, I believe, the deal. You load it up with treasuries. That will give demand to the treasury market. Will label it, and they'll all be short term. All be short term, under 2 year in duration, so they can keep financing the working operations of the treasury market through the issuance of stablecoins. Now, the back end of the treasury market, as Luke Roman says, they want to anesthetize the 10-year, and here's how they do it. Remember, I had Judy Shelton on my show, and Judy was Trump's nominee to run the Fed in 2016. She may run it here when Powell's gone in a few months. And she said, Andy, Trump has told me that he will issue gold-backed certificates, treasuries, rather, redeemable, on July 4th next year, 2026. She told me that. We discussed it when I was part of the transition team, she says. And she's been saying that a lot on Twitter lately. And then shorter duration after that. So he's going to peg it to gold. Now, the first step would be to reshore all the gold. And we're seeing so much gold coming back, it doesn't make sense. More gold has
Mm,
been hitting the COMEX than at ever time in history. And I
mm,
believe there's probably a lot more coming in that the Exchange Stabilization Fund, which is controlled by the Treasury Secretary, can bring back under the guise of national security without telling anyone. They can
right,
bring it
without
back through
reporting.
proxy banks, Citi and Goldman and JP. It doesn't have to come back the way we think. I
Yeah.
think they're bringing back a lot more. But here's where it gets interesting. You know, Luke Roman was asked, do you think they'll revalue gold? I asked Judy Shelton. She said yes. He said yes. He says he thinks they'll let it get to 5, 6, 7,000 between now and the next year and then revalue it to some crazy number. Now, James Rickard says 24,000. Now, for those of you who think this is crazy, gold is held on the U.S. balance sheet in what's called the gold revaluation account. Name of it. Can't make it up. It's true. Nixon did it in 72 and 73, but Roosevelt did it in 33. When he confiscated gold at $20, he devalued the dollar by 40% soon after, made gold 35 bucks an ounce. Now, Nixon did it in 71 after he closed the gold window. The following year, it was closed at 35. The following year, 72, he devalued the dollar by 7% and made gold 38. The next year, he did it to 42.22, devaluing the dollar again. This is where it has stayed on the books until now, where it's still at 42.22 an ounce in the gold revaluation account. Now, if they made it market to market, it's worth about 800 billion to a trillion to the Treasury. The Treasury issues certificates, gives it to the Federal Reserve. The Federal Reserve prints money and gives the money to the Fed. It's highly inflationary and it devalues the dollar against gold considerably, right? But follow me, I'm going somewhere with all of this. So they devalue the dollar, and in essence, it's an accounting gimmick. So the Fed creates that money out of thin air. The Fed then holds the gold on behalf of the Treasury, does not have access or lien on that gold, just the cash value of it. The gold belongs to the Treasury, but they are owed the cash value of it. So they hang on to it until they get paid back. Anyways, the bottom line is that it's an accounting gimmick. But James Rickard says, well, why not make it to 24,000 an ounce? And he gets that number by dividing the gold that hasn't been audited into the money supply, and he comes up with 24,000. Now, every $4,000 increase in the price of gold using that Treasury issue gold certificate issuance would give the Treasury 1 trillion free and clear. At 24,000, that's 6 trillion to the Treasury to work off its debt, no longer issue long-term duration debt for quite some time, or do things this way. And it would be to work down the debt that you owe. And now gold's at 24,000. Who does it benefit? Well, it benefits all the central banks who've been buying it hand over fist. It
Mm,
benefits the U.S. government. But what does it do? It wickedly devalues the dollar, right? And how do you bring your manufacturing home? You can't do it unless you have very low interest rates. Well, if you devalue the dollar and you inflate to pay off your debt, who's going to want to buy your treasuries? If you're trying to bring back your manufacturing to compete with countries like China who are supporting us, so I'm competing with them. They're devaluing their currency. They're printing money to build up their own infrastructure to compete with us. I'm not buying their treasuries. Hell no. That's the theory, right? So this massively devalues the dollar and it creates inflation. It helps pay off the debt. But now what does Judy say? Well, let's peg the long end of the curve, those bonds, to gold, which would mean if you start at 50 and then shortly after do 30 and 20 and maybe 10, and you peg it to gold at a revalued price. So in 50 years, you get X amount of ounces of gold, whatever the price is. That is the inflation hedge. In other words, you don't need a high interest rate to compensate for your inflation and your devalued dollar if it's pegged to gold. So at the end of its duration, at maturity, you get the gold. And the more stupid we are with monetary policy, the higher the value of the gold. So you can have a zero interest rate, zero coupon bond, zero, redeemable in gold at maturity. Still gives you the ability to trade it with liquidity the way the bond market has acted forever. But instead of taking an interest rate way out into the future, you take a fixed rate on the bond. You take gold instead. And if we print more money and do more stupid things, the price of gold will go higher. We'll take the gold back. This would enable us to have a zero coupon bond and have zero interest rates, bring back our manufacturing at a massively devalued dollar, which would support exports, which would also allow us to bring back our businesses at zero borrowing costs and a devalued dollar, build our manufacturing back up, build the infrastructure, train everybody at zero borrowing costs, start to manufacture, because when you have high inflation and indebtedness, you can print, you can default, or you can produce your way out of it. We can't produce right now. We have no manufacturing. You got to bring it all back, but you can't bring it back unless you keep borrowing costs low. But you can't keep borrowing costs low because you owe too much and you're going into debt to pay the debt that's coming due. And on and on and on. And you owe 28 trillion in 3 years. You only take in 15 trillion. What about the 9 trillion in deficit spending? It ain't going to work. So you issue the stable coins to keep the engine running. Everyone thinks they're leaving the legacy system and into cryptos and stable coins. They're supporting it by keeping the engine going in the short-term debt cycle. Then you peg gold at a much higher level to the long end of the curve to keep rates at zero on that end, to bring back your manufacturing and begin to produce your way out of it. And they get up, Trump gets up on stage in a year or two and he looks right at you, Jay, and he says, he's talking to your daughter and to the father in you. And he says, listen, we got to do this so that your daughter and her children have a future. And if we don't, if we have all of our key manufacturing around the world, we're done. And we're too far in debt. And the only way to pay off this debt is to produce our way out of it. So we're going to revalue gold, which will enable us to devalue the dollar, to work our debt off, to peg it to the long end of the curve, to keep rates low. But on the front end, well, that's the stable coins that are going to be continuously going through every single form of transaction that knows KYT and KYC and AML. The noose is closing, but they're going to do it to keep the game going. So the dollar's dead. They will kill it. And in an effort, I believe, to support the bond market, the legacy system goes on, and they can maybe, and here's the virtuous part about it, in that environment, bring back key manufacturing all over the place, invest in the country, build the infrastructure, and truly have a fighting chance to grow our way out of it. I think it's the only hope. Now, you look at the comments that Besant makes. He's a self-proclaimed gold bug. He wants to be around for a new monetary system. He's going to remonetize the assets of the U.S. balance sheet. Trump says on Easter Sunday, he who has the gold makes the rules. Judy Shelton says we're going to back it July 4th. Do you see the crumbs everywhere?
Right.
I do. So the
If it looks
question
like
I
a
would
duck,
ask
quacks
anyone,
like a duck, it's a duck. Right.
how do you finance long-term debt without rates going to the moon? When we continue to spend more and more and more and more and more and go into debt more and more, you can't. And if rates go up, what happens to the stock market? Boom. The bond market. Boom. The real estate market. Boom. The banks that hold at 5% start to blow up. Boom. And the insurance companies that hold treasuries. Kaboom. So
Everything
that is,
it's like
yes,
switching seats in the Titanic. Anything pegged to the dollar is going down with it.
that's right. You save in dollars, you're going to go broke. But if we embrace the stable coins, which really they're going to keep the
And
engine
that's
of,
blockchain,
uh,
right? It's stable coins
yes,
through blockchain. Everything's stored
yes.
publicly, right?
And but
Decentralized. That makes
it,
even more
it
your point.
Well, and the fact that they have KYT, meaning they're going to know what you're doing.
Right.
So privacy's out the window. So if you want to do these things like buy ammunition and buy handguns for your family, go out and stock up on weed at the dispensary and cigarettes and alcohol and all the things that they may say you can't do. I'm just being facetious, but I'm just simply saying that the things that we do that maybe you don't want to be governed on, the KYT transactions are coming, and you hear it right here in the developer of BRICS Pay. It's the same type of digital platform, and you go back and look at the bank teller saying, "Well, what are you going to do with that money? None of your freaking business." But I believe that was the beginning of KYT. They wanted to start, see if we can figure out what these people are doing with their money. Don't push it too much. And the fact that I take all these classes, I've never heard of KYT, is something that's concerning. Everyone I've asked since then has not either. But this guy says it's inbred into the, or it's in the software. So, anyways, the bottom line is, I look for gold and silver to go parabolic. I look for gold to be revalued. If it does, silver will go to the moon along with it. I look at a situation where if you save in dollars, you're dead.
Yep.
What year were you born?
92.
92. Okay, well, let's just say in when you were 16 would have been 2008. Um, you inherited you inherited. Let me see, what would it have been? 800. You inherited. Go with me on this, and let's take some questions. I'll take any questions you have. The average price, so it would have been 800. So 350. Let's say you inherited 420 ounces of gold. Um, the average price of a house was 350,000 then, and gold was on average 850 bucks an ounce. So 420 times 850, that's 357,000. You buy a killer house. You're 16 years old. You buy a house for you and your family, and you decide to sell the gold. And then you think, what am I doing this for? I'm going to keep this gold. I'll take out a mortgage and we'll work it off. So that gold for the past, what would that be? 18. So for the past 17 years has been sitting in your safe deposit box, earning nothing but dust, right? And the price of a house today is average price about 420. So, your house, the dollar, if you would have just kept the dollars, it cost you 350 to buy a house. Now it's 420. So, in
Right.
terms of real estate, the dollar's gone down, right? And real estate's gone up. But that gold that you've been keeping, right? The 420 ounces that you've kept earning no interest for the last 18 years is worth $1.4 million.
Mm.
So my point to you is that if you save in dollars, that now buys you four houses almost, right? Paying no interest. And the point I'm making is that the dollar is continuing to lose value. I can make this example going back to the Civil War, and with the 1933 with the suit and the $20 gold piece and how it was an ounce of
Yep.
gold and it bought everything for $20. Well, $20 doesn't buy you a tie, but now it buys you the whole everything. The $3,500 would buy you the nicest suit ever. So the point of it is that gold is not only retaining its value, it's going to accelerate your purchasing power as the dollar continues to be destroyed. And I believe it is the only option they have, Jay, the only option they have to keep the game going, to support the bond market is to destroy the dollar. You can't do both. Can't have a strong dollar and a strong bond market. It ain't going to work in this because we're so far down the indebted path. If you see rates that go higher, or rates that go lower on a strong bond market, who's going to buy? Who's going to buy our bonds? No one's going to buy our bonds with the indebtedness, and we can't bring back the manufacturing with the strong dollar. It just won't work.
Can you see this chart to the right here? Silver price
Yep.
performance. 20
Yep.
years, silver's up 429%. 5 years, it's up 57%. 6 months, 21%. So just going along with, you talking about me inheriting gold at 16 years old. This is never going to start going downwards, right? It's not like, things are just going to start going backwards. I just want to, but I just want to share those percentages. But can you see this other screen now?
Yep. Yep.
Okay, so August 1st, I want to bring this up because August 1st is only a couple days away. So this says silver soars to $50 and gold to 4,400 by August 1st amid new tariffs. So this guy says gold, he asks Grok, gold and silver imports from Mexico and the EU to be tariffed at 30% starting August 1st. And then that puts imported silver at 15, gold near 44. And then Grok says, yes, the 30% tariff applies to silver imports from Mexico and the EU starting August 1st, 2025, as it's a broad levy on goods with no exemptions mentioned for precious metals. Mexico, the top global silver producer, supplies about 25% of U.S. imports, so prices may rise. If they retaliate, U.S. rates increase accordingly. So August 1st is a huge, I mean, that's a big deal, right? Like August 1st is a big deal. And I don't know if people know about this, or even, a lot of people probably don't know about it. Like if they don't watch my channel or, certain news stuff, they probably had no idea. But what do you think about
Well, it
that?
makes sense. I mean, we are net importers of silver. Um, and you look at Mexico and their new administration is nationalizing a lot of their assets too. Like strategic assets, and there's rumors that they want to nationalize their silver assets. They've had enough of being plundered by the rest of the world, pillaged. Um, there's a good chance that they just stop exporting silver, period. You look at the next, the number three, which is Peru,
Peru, yeah.
and China just built, I believe, a deep water port there for them and trying to, bring them into the Belt Road type of deal, and um, they're going around Peru and buying up. Sean Kun has told me that our mutual friend that they're buying up all the doré concentrate from the miners directly in Peru and Mexico. In fact, Vince Lancy, his comment was the Chinese for years have been buying silver from Mexico before it's even called silver, before it's even pulled out of the ground. In other words, they're buying doré. So they buy all of the doré and the concentrate, which would be the byproduct of the mining. It's a sludge, and the doré is the very, very crudely refined bar that may be 30% silver. The rest of it's all the other shit that they put together, and they send it in for pure refining. Well, they're paying double what the West will, sending it back to China and refining it as the second largest producer in the world. So the first is Mexico, the second is China, the third is Peru. So
Right.
China's buying directly from Peru and Mexico, the number one and three supplier, doré and concentrate. They're probably buying refined stuff too. I'm sure they're buying stuff everywhere. So you're getting to a point where this race for
Yep.
commodities is accelerating. And the
Yep.
point that you make is very, very valid and very quickly could shut off. You start to see tariffs on this kind of stuff. You wonder how high could silver go
I mean,
in an environment where the LBMA can't deliver because they're 8 weeks delayed and
yeah.
trading 15 times the float every day. And then you see this kind of stuff. It's the word asymmetrical, Jay. Asymmetrical means lowest downside, highest upside. And I don't think there's an asset on the planet and all the silver work you've done to the community for so long will be rewarded with gratitude.
Yeah.
I guarantee you, because
I mean,
this
already,
is a
like,
generational opportunity.
not e- already, right? All of my clients from last year that were buying silver off me, a lot of them have already doubled their money. I had a guy text me the other day, a good friend, but I sold him a lot of silver. And with silver at $39 now, he's already almost doubled his. He could sell half of it, go like it's already happened. And this is nothing yet. People will be wishing they can build a time machine, go back to July 30th, 2025 and pay $37, $38. They will be wishing that. Like we're still the people that bought Bitcoin at 20 cents in 2014. That's still us right now. Most people will buy silver way after it's exploded, right? We're still those pioneers before the curve. So take advantage of it, right? We know it's going to go much higher.
And not
But
only that, it's going to go higher, and your ability to do it and do it with privacy outside the system is being
mm,
compromised by the day.
and harder to
That
get
they're
too.
coming in. They're coming in on your privacy and they'll know everything about you, know your transaction, not just know your client and your anti-money laundering. Did you get it legitimately? And have you paid your taxes on it? But by the way, um, what are you buying? And we'll be able to track that if all of a sudden they say, all of these institutions you work with are like, we are no longer offering standard checking accounts. It's a stablecoin account, and it's very, very convenient for you. And your check will clear in 7 seconds. Instead of it being a check, it's a stable. It's like Venmo or Zelle.
Yep,
Everything's
yep,
going to be like that, and it's going to
yep,
be done under the name of convenience.
yep,
But that convenience will have just lopped off
yep,
all privacy that you ever had with cash.
yep. It's and it reminds me of JP Morgan back when Bitcoin was like taking off. Jamie Dimon went on national TV and called Bitcoin a scam, says don't touch it. And then right afterwards, JP Morgan gets caught buying millions in Bitcoin. He got caught, right? He said that on purpose to shoot the price down so he can buy more of it. But that's because it's blockchain. Everything's public. Everyone saw JP Morgan buying that. That's the decentralized aspect is everything is public, everything's for show, right?
Think of every game you've ever played. I mean, every game you've ever played, in almost every game, the object is to misdirect the opponent. If you're playing basketball, it's the no look pass. There's plays in football called misdirection. That's a handoff where the whole line goes this way, or a screen pass where everyone goes this way, but the one guy sneaks out to the other side to the flat and he's wide open. because the play's over here, but that one guy's over there, misdirection. Think of checker or chess. You know,
I
chess.
love chess. I play chess every day. I'm
Well,
addicted to chess.
you flank one side of the king with and then you bring around the queen on the other side. You're misdirecting, right? You're thinking
Yeah,
steps
four
ahead, and
steps out. Yeah.
misdirection. I've talked about misdirection forever. The art of war, beating your opponent without throwing a punch. This type of rhetoric is taught everywhere. It's taught at West Point and CIA, that they make you read the art of war.
I read that a couple months ago.
And so when you talk about, Bill Belichick uses it to formulate game theory, and it's as I mentioned, it's taught in most law schools on formulating arguments, and business schools and corporate hierarchy and all this stuff. But misdirection, that's it's everywhere. And so that's why, they misdirect the price of gold and silver, and they misdirect or they suppress everything through misdirection of price and of narrative. Remember what we all often said: price is the greatest
Price is, I
misdirection.
was waiting for you to pause so I could say that. Price is the
Yes.
greatest tool of misdirection.
And that's why, so they
Yes.
lower the price, just like he did. Speak through rhetoric, lower the price, misdirect the public. Oh shit, well, he doesn't like it and it's going down. And then, hey guys, load up now.
Boom.
Everyone's not looking. But that's what they do. And
Yep.
that's what you have to understand. You have your gut and your eyes speak to each other, and your eyes are saying to your gut, who are you going to believe, yourself or your lying eyes? And
Mm.
so, is it your eyes that are lying to you, or your gut who's telling you, something's not right with this? And that's the part that takes a little discipline, and but
Yeah.
you see it over and over and over again, whether it be Jamie Dimon, whether it be the way the market moves, whether it be the central banks, everything. And the fact is that the media doesn't give us any ability these days to do anything, discerning. We have to listen to guys like you and me to try and find what the
Yeah.
real news is, and then go from there. What else you
Yeah.
got, bro?
Um, I mean, there's so much, but I guess we could
Really?
end on. I did want to mention the BRICS summit July 6th and July 7th in Rio de Janeiro, Brazil. Um, did you did you check that out at all, or because I thought one thing was interesting, or a couple of things. They didn't mention Trump's name, but they talked around his name like he was the boogeyman, and he did threaten them, saying that if you guys try to do anything to upmine the dollar, he's gonna throw 100% tariffs. Like that was his threat during that. And China announced they're focusing on silver on July 6th, right? I don't think that was ironic either. But yeah, because I just wanted to hear your thoughts on that, or if
They,
anything came out.
those aren't tariffs; those are sanctions. A tariff supports the manufacturing industry. That isn't a tariff; that's a sanction. That's what brings them together. They had like 9 or 10 other partner countries that have joined.
Yeah, since.
Indonesia, Vietnam, and whatnot. Their main focus was a new payment platform. This is BRICS Bridge. It settles in
Right.
7 seconds,
What about the
and
unit?
outside of SWIFT interference. The unit, I believe what they're doing with the unit. Here's my thought on the unit. I believe so. Shanghai Metals Associated, the Shanghai Metals Market, opened up this. They said we're expanding all of our vaults through multi-jurisdictional facilities throughout the Belt Road, and starting with Hong Kong, and then Saudi Arabia, and then all throughout Asia and Africa. And they're doing that. And then they said now yuan is immediately convertible into gold. So think of the unit. The unit was 60% currency of the BRICS
Yep.
plus nations, 40% gold back. So instead, because I think they're waiting Trump out, because of his
Makes
threats,
sense.
and you got Saudi Arabia and India straddling relations and this and that. And so instead, what China is doing is fine, we'll do this and they can't fuck with us. So here's what we're going to do. We're going to start by building out all of this infrastructure, the skeletal system of the unit, which was going to be 40% gold back deliverable. Remember, Dilma Rousseff, the former president of Brazil and the head of the New Development Bank, the BRICS New Development Bank, said, we've agreed to it in principle. We're going to do
Mm.
this. So after all the pushback and the BIS pulling out, it used to be called M Bridge. Now it's called the Bridge,
Yeah,
because M
Project
Bridge,
Enbridge. Yeah.
the BIS pulled out at the 12th hour. After it was already, so the BIS Innovation Hub helped design or develop and integrate this technology to the West. It's Chinese technology: China, Hong Kong, Thailand, UAE. Saudi Arabia became the fifth full participant at the end. So those five countries, in coordination with the BIS Innovation Hub, which is a Western institution, they pull out at the 12th hour. It's espionage. It's James Bond. And
Mm.
the guy, Augustus Carstens, this fat guy who looks like Augustus from Willy Wonka growing up, said, well, we can't be part of any technology that allows countries to sidestep Western sanctions. That's as if they just then realized that Russia was the R in BRICS after 4 years of developing it, and they pulled out. So it pissed them off. And they now call it the bridge. And they've already, as I mentioned, they've already signed up the 11 countries in Southeast Asia, the 5 countries in the Middle East, and now we're integrating it into the Belt Road. It's going to be massively expansive. And so I believe,
Mm.
and then the settlement is the gold that will be not only the BRICS metals exchange, the new Moscow exchange, the new exchange in Singapore, all of these exchanges that aren't directly tied to the Shanghai Metals Exchange, along with their expansion in multi jurisdictional hubs. And then they said, as of right now, you can take your yuan and switch it into gold in yuan right now. You do not have to convert to dollars. So Saudi
Yeah.
Arabia buys oil from China, not in dollars, or the other way around. China buys from Saudi Arabia in yuan, not in dollars, and Saudi Arabia switches it to gold. Soon they'll be able to take that gold right out of the vault, the Shanghai vault, that will be in Saudi Arabia, audited by the Saudis, et cetera. And soon it'll be all throughout the ecosystem, multi-jurisdictional. Because what happened to Venezuela, the Bank of England? Can we have our gold back? No, go kiss my ass. No, goodbye. And so that didn't work well for Venezuela. So you have it in multi-jurisdictional vaults, so it's not in one place. And this is the rails of the new unit system. So China sets it up under the yuan and internationalizing the yuan for trade, which they want to do. And they don't want to be the world reserve currency. They know they will hollow out their manufacturing base just the way that we did, because you cannot have a weak, your currency always has to be stronger than everyone else's to be the world reserve, because you cannot give them enough currency to transact if it's the world reserve just through trade alone. So they have to
Yeah.
sell their currency to buy your currency to do business. It pushes your currency up, their currency down, and that's why you send manufacturing to the cheap currency, because you can do it much less for much less money. So they don't want that. Gold will be the reserve, but this will be the rails that will allow all of these countries to trade in 7 seconds outside of SWIFT interference at a 98% reduction in costs using the bridge technology. So Saudi trades their oil to China for digital yuan, immediately converts it into gold. China buys corn from Brazil, immediately convert that into gold. Brazil buys, oil from Saudi Arabia. Their currency goes to Saudi. We don't really want that currency. Well, we will immediately convert it into gold. So the point of it is that it's the rails. Now Trump's gone, and they just say, screw it. We're now bringing the unit in, and all of these countries that have now aligned with us. You're talking the majority of human population if you bring in the Belt Road, which they are now saying BRICS Bay and BRICS Bridge are being integrated into the Belt Road, along with the Shanghai Cooperation Organization and the Eurasian Economic Union. We got the 11 Asian countries, the 5 Middle East. You have the majority of the world, and the majority of the commodities, and the majority of the rare earths, and the majority of the refining of the rare earths, and the majority of the manufacturing of the world, and the majority of the on-sea and cross-land trade routes, and 3 of the 4 largest. Do you see where we're going? This is nothing to say, yeah, bullshit, it's not big enough.
Right.
Everyone said it's not big enough, and maybe it isn't big enough, but you open it up to countries that are directly aligned with the BRICS, with great symmetry, but not part of it,
Boom.
like the Belt Road, etc. Whoa, that's a whole different animal altogether. So yes, I think
Wow.
that things are changing in a very, very, very big way,
Wow. You
and I think it's happening. But so to your point, to the unit, they'll build the rails, they'll build the skeletal system, that being the vaulting system and multi-jurisdictional vaults. The bridge technology already works. Saudi Arabia can now, for all the Middle Eastern countries, they can start trading their oil and their natural gas and their resources with other countries across this deal and switch to gold and back and forth. And the SWIFT won't even know about it, because the reason that the U.S. knows how much business is being done, elsewhere, is because ultimately that things have to go back and forth through the SWIFT system to go into
right.
dollars.
Right.
But if you're never
Exactly.
touching the SWIFT system or going in and out of dollars, no
Right.
one's going to know shit.
Americans'
So the
greedy little
whole
fingers
thing,
aren't in their pockets.
that's exactly right. And if the way it is now, if Saudi Arabia wanted to trade with China, well, China has to convert to dollars. to buy oil from Saudi Arabia, and then and then the oil gets sent back. But if Saudi Arabia wants to buy something from China, they have to convert to dollars, and then convert to yuan from the dollars, and the whole thing is just crazy. There's all these conversions through intermediary banks, cost money, cost time, and now you just go bang bang and done in 7 seconds
Wow.
with no swift interference. Can't be kicked out, can't be sanctioned. Go ahead, sanction me. What do I care? And we're
This
not
is
there yet.
insane.
And I think if they brought the unit in right now, it would freak Trump out. And just to save face,
Oh
he would
yeah.
start doing stupid things.
Oh
So
yeah.
instead, the Chinese do it and say, we're going to just going to slowly, industrialize and internationalize the yuan and our Shanghai Metals Exchange. And
You
then
know,
it's the rails and the skeletal system to the M-bridge or to the unit technology.
I've said this before. I wonder if Trump is as educated as as you are with all of this stuff going on. I mean, you've connected the dots. You see the whole picture for what it is. But I wonder if Trump, or not even just Trump, just in general, if others are seeing things the way that
I
you
think
are.
they do.
Or
I think
you
I,
think
I do,
so?
and I'm taking all of this from their actions and their comments. Judy Shelton's,
True.
Scott Bessent's, the fact we become net importers. All of the things that I see, what's happening with the Belt Road, what's happening with the expansion of the yuan and the Shanghai Metals Exchange, and you take it all together, and that's if I have one ability besides being really hardworking. It's that I take all of these pieces and I find a common thread of
Yes.
commonality. I mean, a thread of
Yes.
commonality. And I'm like, yeah, well,
Yes.
that's cool. That's cool. But what if they were to get,
But
holy shit, you put that
yeah.
together and oh my
Yes.
God. And then, I mean, so in and of themselves, all of these things are significant. Put them together with a
Mm,
motivation and a
yeah.
commonality of a singularity of thought, and you can see
And
how, and that's been my success on saying all this stuff for the past 5 years, a lot of which has come true because
yeah.
it's right there. The crumbs are there. It's whether or not you have the courage to connect them and say it
Yeah.
publicly, or
And
the
that's
stupidity.
boom. You're the only one that, because they might see it, but you're the only one that is
Because
saying
it's a
it.
risk. I could be wrong, and I say maybe I am wrong. I don't know. But you put all this
It
stuff
does.
together, you're like, man,
But how, I mean, it's not even about being right or wrong. You're exposing the actions themselves, right? You're talking about the facts. This stuff is actually happening, right? I mean, this stuff is happening. You're just mentioning what the consequence could be of these actions.
especially
So
if they're all connected on a
yeah,
linear path.
right.
So
But it's
I
not
know
even
we're getting
about
long,
that.
and
Yeah.
well, but it isn't, and it is and it isn't. So I guess we'll see how it all plays out. But
Yeah.
let's do this more often, Jay.
Yeah,
I
for
miss
sure.
hanging out
Every
with you, and so
Wednesday. Every
yep.
Wednesday,
So
1 p.m.
I'm back. This next Wednesday I'm here. The following Wednesday I'm out of town, but
Okay.
every Wednesday after that I
Yeah.
am here. But next
Yeah.
Wednesday we're back. So
Yeah.
good
And
to be here
yeah.
with you, and look forward to doing it next week.
Yeah, and folks, I honestly recommend you rewatch this. A lot of this stuff, when Andy's talking, there's so much information jam-packed. I truly would recommend rewatching this, and you'll probably catch a lot of new stuff that he said. Like study this stuff because it is important. And if you wanted to purchase from us, info@milesfranklin.com, letting us Slayer sent you. Helps me out. Love you all. Thank you so much for tuning in. This was Silver Slayer. I'll see you guys tomorrow. Peace. Folks, I'm so excited to announce that I've partnered with American medical experts whose purpose is helping veterans get the medical benefits that they truly deserve. Over 17 million veterans aren't receiving their full benefits, and if this is you or someone you know, then act now. American medical experts are offering free consultations through our med team to see how we can help. The med team offers board-certified doctors who have experience working with the VA, comprehensive medical evidence for services like mental health as well. Some of these include your Nexus letter, your DBQs, your TDIUs, your AAs, and more. I want to personally thank American medical experts for helping veterans, but also giving me an opportunity to help veterans as well. Click the link in the description or the pinned comment to get a free consultation through our med team. Thank you so much for listening, and God bless.